Hello, it's Friday, January 18th, 2019. I'm Steve Houston with Compass Communications, and I'm here again with Joe Terrell of Terrell and Company. And Joe, it's our first look at the markets and investment in 2019. 2018 closed out with unprecedented downward volatility in stocks, bonds, commodities. Is this something that's related to the political climate we have these days, or is there some fundamental issue with the economy?
There's no negative fundamental issue with the economy in the United States. And I would also say the European economy, Chinese economy, Japanese economy, South Korea, other countries around the world, there's no fundamental problem with the economies. Central banks all over the world, including the United States, are still very easy with credit and supplying ample reserves. What happened towards the end of the year was a fear, and I stress fear, that the China-United States trade issues were getting ready to drag the whole world into a severe recession. And as happens, the domino theory that people in their mind incorrectly believe this will drag the world into recession, the banks will end up with bad loans, interest rates will plunge and go back to zero, the price of commodities will collapse because there's no demand for them. And we saw that at the end of the year. Now, it was also an exaggerated move by the end of the year because in today's world, a lot of these financial products are traded by computer. And the computer was hitting sell, sell, but it was the middle of December. The holiday season had already started. There was no liquidity. Many people who would normally be on the buy side had already wound down for the holidays. So it was an unusual scenario, and it was severe, but very much exaggerated downside moves.
So we started off 2019 with a good jobs report, and now there's a lot of talk about the Fed dialing back the interest rate increases. What are your thoughts on the Fed and the impact on the markets?
Well, let me start by saying this. I'm still very optimistic and bullish on the United States economy as well as the balance of the world. People are working all over the world. Unemployment is low, wages are going up, and the consumer is spending. Businesses are being a little cautious because they're worried about what's happening with trade negotiations, but businesses are not sticking their head in the sand and contracting. They're just being a little cautious. And I think this good economy is going to continue. I don't see an environment where the United States and China are going to commit mutual economic suicide. If anything, I think that some of the agreements that have already been made between the United States and China are not getting the publicity that maybe they should. So I look for a good economy. Therefore, the thinking that interest rates are going to collapse and go back to zero is wrong. Federal Reserve Bank in the United States raised rates in December to 2.5%. They'll probably raise another 1/4 or 0.5% in 2019. But the thinking that they're going to reverse course and cut interest rates back down to 1% is wrong.
Okay. So how are you positioning your portfolio in 2019?
We maintained what we held last year. We bought about another $25 million in floating rate issues, particularly the ones that have floored coupons that had gone down as much as 10 and 15% in price. Many of these issues, it was unprecedented. You could buy them to yield 6%. And we bought quite a bit of that. We selectively bought some stocks. The ones that got or took the biggest beating were the ones that said the computer says you're tied to the economy the most. Energy stocks, financial stocks, semiconductor computer chip stocks, if you will. And we selectively bought more there also, and even into January have continued to selectively buy more in that area. The rundown in prices was an opportunity, is an opportunity even today. Even with the market having recovered a reasonable amount, they're still good buys, particularly good dividend-paying stocks that are buying back stock, paying dividends, and the price is down. This is what the area that we're concentrating in.
Thank you very much, Joe. That's Joe Terrilco, founder of Terrilco & Company, independent wealth management with $700 million in discretionary assets under management. Joe, it's been a pleasure visiting with you. We hope everyone's 2019 goes without the chaos that we have right now. And we'll see you, I guess, in another month.
Thanks, Steve.